Short term, we need to be careful about this ascending triangle, which is taking another shape a little bit. It's breaking the support here. It probably finds some support around 1300. Let's see if there is a rebound there.
Well, hello Bruno, and welcome back. How are you?
Well, I'm fine, thank you.
Wonderful. So today we're going to start looking at the technology sector in the US. It has rebounded to the old-time high. Do you see this continuing?
Well, you're right to look at the technology sector. It has been the leading sector and it has been displayed by the rising relative strength we see here at higher highs over the last 3 weeks during the whole rebound. And this rebound has been so strong that it has touched again the former high that we had in January. Now the market is making giving us a little information here by making a black candle, a back candle, which is encompassing the whole white one. This is called an engulfing pattern and a reversal. That means that probably along this bearish divergence, things could correct a little bit.
This is good, but is a reversal in one sector really a good indicator?
Well, it's happening on many other sectors, namely in the different cyclical sectors which are holding and bringing the market up. The one which is the impressive one, reversal, is in discretionary. In addition to that, discretionary sector is starting to fall down in relative strength, so people are moving out into defensive. We see also in industrial, full reversal, engulfing pattern, and also weaker stochastics here, potential bearish divergence. So it calls for a pullback also of 50 to 38%. And we see also financials, which were supported by rising yield and a rising relative strength, is also making a reversal that could make a pause as well.
And what is the risk of decline for the S&P?
Well, all of that imply, as we can see here, that we had an engulfing pattern, black candle, which is in addition filling the gap up that we had 2 days before. This is a relatively strong signal that things are going to correct a little bit. We need a pullback, probably in the vicinity of the 38%, around 2691 or 2670. We see also that the VIX is rebounding from where it was breaking up around 16-17%. So here we have two indicators suggesting really a pullback.
So what about in the medium term? Do you see it still going lower?
Well, we will not go in theory all the way back to the spike low that we had, because the rebound that we got in the 10 days before was really accompanied with a relatively lot of volumes. The stochastic had crossed up here. So what we've got is probably a 50% at most pullback, probably, as we said, around 2670. And then a new high. A new high probably above the one that we just saw here yesterday, but also probably around 2872. Before then comes something, we will discuss that in April later on. Back down. But we have time.
Yeah. Are you expecting to see a similar sort of pattern for Europe and Japan?
Yes, it will follow in terms of direction at least. If we look at the Euro stocks, we notice that the relative strength was down, and therefore the rebound was weaker, and therefore it can come closer to the previous bottom, but should not reach the spike lows here. And then do the same thing, rebounds and so on. And if we look at Japan, we see the situation is a little bit better because it was able to rebound a bit more. And also it is influenced by the fact that the yen, which was rising, now is pausing. So if yen continue to pause, it's good for the Nikkei. So it should help a little bit the relative strength here to make a higher high after the higher lows here. So it's more neutral for Japan.
Okay, let's jump over to the emerging markets. Are they being affected at all by the US?
They tended to be independent so far, but now we see there is some more rotations. One surprising thing is that the India, which was the leader all of last year on relative strength versus the S&P, is really continuing to decline. and that is seen here by a very weak rebound. Also, if we look at China, China is more in line with the US. It has rebounded better. It is still holding key supports, but the relative strength is weakening a little bit, so I would tend to be cautious during this pullback here. The only one which is outperforming both is Brazil, which was not really something doing too well in the past year, but now is rebounding in relative strength as well. So here, it's like the nasdaq. It's at the top of the previous range, and it could simply pull back quite to the middle of the range.
So with all these drops and volatility, is there nowhere to hide?
Well, people would thought maybe we should go in gold. We had here an ascending triangle. We know that this line at 1370 is extremely important as resistance. Once broken, it opens 1400. Short term, we need to be careful about this ascending triangle, which is taking another shape a little bit. It's breaking the support here. It probably finds some support around 1300. Let's see if there is a rebound there. It's not really an immediate place to hide. And the other one is probably people are thinking about bonds if equity are going down, but bonds are really the story which is making equity correct. We had these comments of Powell yesterday. Bonds are back up to their tops. Of course, as long as it is below 3%, things are fine, but it's not a place to hide because it could one day break 3%. So really, all in all, what we need to remind is that 2017 was a year of low volatility. 2018 is going to be much higher volatility. You have to take technical decisions, be ready to follow the market quite quickly, and volatility of the VIX probably will remain much higher than 10%, probably in the vicinity of 17 to 20%.
Bruno, thank you so much for speaking with us, as always. We're going to have a little break now, but I look forward to speaking with you again.
Yes, thank you.
And thank you for watching. As I said, a short break from me and Bruno now, but we'll see you soon.